Lyft drivers are not the only people that are unhappy with the company. Businessmen and investors and analysts who have invested in the company's IPO are suing Lyft for what they claim are misleadings of how valuable the company actually was. But before we talk about that, let's have a word from our sponsors. Times are changing for gig workers and the gig economy, and there are a lot more gigs from a lot more companies than there used to be. That's why when people ask me where they can go to find resources for the gig economy, I recommend gigworker.com. At this site, you can see what other gig workers are doing and discover better opportunities from industries, companies, resources, and even a forum where you can talk with other people in the gig economy. Gigworker.com is a great resource site whether you work for Uber, Lyft, Postmates, DoorDash, TaxRabbit, Thumbtack, Upwork, whatever. There's a gig for you and there's a forum for you on gigworker.com. Gigworker.com for all your gigs. Hey everyone, this is Kevin the Apptrepreneur, and yes, we're pretty much going to start out on the small screen. We're going to jump right into this. This is what Lyft was trading at today on May 22nd. You will probably be watching this on May 23rd. And it looks like, yeah, everything's going fine. You know, it's up 4.27% to, it started out at 55.81, got down to about 55.80, but ultimately closed at 57.88. And in the after hours, it's at 57.34. So that's not too bad. I mean, in fact, if you looked at this one day increase, you might even say it's going good. Heck, if you do the week, you could say, hey, look, it's going up. That's not too bad. We're doing pretty good. But what happens when you go max? Or the year? Let's do the year. Ooh, that doesn't look so good. As you can see, it's going up, but it's still way down from what this was. And this is what has prompted investors to sue Lyft. According to Reuters, Lyft is sued by investors over its initial public offering court filing. Lawsuit also names Lyft executives and bank underwriters as defendants. Lawsuit claims Lyft misled investors about its ride-sharing position, bicycle safety issues, and labor matters. Lawsuit filed in San Francisco federal court claims Lyft false and misleading statements inflated company share price and that investors lost money when the price fell. It's a very brief, very, very straightforward article. So obviously there's not that much to touch upon, and yet there is. Lyft is sued by investors over its initial public offering court filing. This is actually not uncommon. There are if your company goes IPO and it underperforms, you will get sued by investors. In fact, investors tend to sue companies when the company's not doing well. It's always the same thing. They didn't tell us they were doing bad. They didn't tell us this. They didn't tell them that. But in this case, it might be a little bit more complicated than that. So let's look at this. Lawsuit also names Lyft executives and bank underwriters as defendants. Yep, that makes sense. Lawsuit claims Lyft misled investors about its ride-sharing position. Well, I believe what they were selling their position on was that they were number two, and that maybe one day self-driving cars would come along. I mean, I read as much of the IPO filing as I could, and they were pretty honest about a lot of things. A lot of things that, you know, they're actually complaining about in this lawsuit. But Lyft seemed to always say, yeah, we're the number two ride share. We've got these plans to grow. We're not there yet, but hopefully we'll get there. So I think Lyft was always very clear about their position. Now, here's the thing. They're also suing because of the bicycle safety issues. Well, Lyft probably was not aware of the bicycle safety issues, but here's something I can tell you right now. The bicycle safety issues is not the main reason Lyft stock is doing poorly. In fact, bicycles, despite not being a very big business, makes them money. But it's not a big business. So, you know, when they go down, I mean, they lose money, but is it a lot of money? It's a really weird thing. Like, it's profitable, but it's not like it's that profitable for them. So bicycle safety issues is not what's causing the stock to drop. And then they say, and labor matters. Now, the labor matters might be a little bit more important because what do they mean with labor matters? Well, I, of course, have to assume, I don't know what the people suing Lyft was thinking when they penned this lawsuit, but I think they're referring to the protests. The protest, the strike, whatever you want to call it, because those protests took away a very popular and positive opinion of Uber and Lyft. Investors don't like looking at companies that have like an uneasy workforce who was in the streets protesting and striking, saying how much the company sucks. Yeah, they all went back to driving the next day. We know they did. And so financially, it didn't really hurt them, but it got enough people's attention that it made them aware that the drivers were not being treated properly. For that matter, it also made people aware of the upfront pricing, and now places like Jalopnik are, well, writing articles and doing video features about how much Uber's taking up from pricing, which, yeah, that affects the drivers, but it also affects the riders. Because the riders are paying an inflated price for a ride they don't need to pay an inflated price on, at least in the riders' minds, once they see how much Uber and Lyft are taking. So when I read that they're suing over labor matters, I think it's because the drivers are being a problem. And they've been a problem for a little while, if we're being honest, and Lyft, they want Lyft to get control of them. Like say, hey, you need to do something about this. And Lyft has had years to do so, but they haven't done anything. So these are the three things that they're suing for. But really, when you get down to it, that's the technicality. That's what they believe will stick in a lawsuit. The reason they're suing Lyft is a simple one. They invested in a company that has lost 20 to 30% of its value. And that's not fun, and they want to get their money back. That's what this is really about. And here's the thing. All those investors, I don't feel sorry for them. I really don't. I mean, I don't like to see anyone lose money. It's not like I take any particular joy in watching people lose money. But investors had all the information they needed up front about what kind of company Uber and Lyft was. They knew, well, let's talk about Lyft. They knew Lyft was not the number one ride-sharing company. So they knew they were buying stock on number two. They knew that up front. They also knew Lyft was wildly unprofitable. Lyft was also very upfront. They might never be profitable. Heck, Lyft mentioned that they could not afford minimum wage for their drivers. That's really, really bad, by the way. Lyft admitted a lot of things that they were not in control of, did not have financially lined up, so to speak. They didn't have their finances in order. That's the term, in order. They were honest about all of this stuff, and investors bought anyway. Or maybe they didn't. That's why the stock dropped. But the people who did buy, yeah, they're looking at stock that is pretty darn cratered, and yeah, it's making some gains. Like I said, you kind of go back over here briefly, and you go to the day, and as you can see, or heck, even the week, like you can see it's starting to go back up. But that does not change the fact that it's, for the most part, just gone down. The lowest it got was $48.15. $57.88 is not that much. It's about less than $10 more than the lowest, so it could still drop. It could also get high, but Lyft has been very upfront about all the problems they have. They don't have a food delivery service. Their bikes make them money, but it's not very widespread. They have very strenuous relationships with their drivers. They lose about 58 cents on every ride that they do. They have no ways of raising more money after this IPO is done. There's a lot of reasons to not invest in Lyft, even in the long term. I mean, the way it's been going, even if you want to invest in Lyft, just wait for it to go down a little bit more. It will continue to go down, in my opinion. It might go up at some point, but you never know. And again, I've seen this happen. When Facebook went down, people sued Facebook for misleading them. When Netflix went down, and Netflix actually got to $20 a share at one point. And they got sued for basically not being upfront about their losses. But the thing is, this is just Silicon Valley. Silicon Valley has like a new form of success, and it's one I don't understand. They actually pride themselves in losing billions of dollars for more market share. It's kind of the new thing. Whereas in my opinion, and I think most people's opinion, if you're losing money, you're losing money. That means you're not successful. It means you don't have a business model. And they need to figure that out. Now, in the last in the first earnings report, Lyft admitted that they had like a lot of losses, another $1 billion to be precise, but that they felt the height of losses had come to an end. Now, here's the thing. If we're here next year and they're still losing $1 billion a quarter, the investors have even more of a reason to sue them, because that's Lyft being overly cocky and saying, hey, no, don't worry, we've got this. But I don't know. You see, this is why I always tell people, if you're going to invest, never invest anything you aren't willing to lose. If you don't want to lose it, don't invest it. Yeah, it might go high, it could go low. That's the thing. It's gambling in a certain sense. So the investors are not happy, but I could have told them this was a bad investment. A lot of people could have told them it's a bad investment. I just find it interesting that there are investors out there who have bought stock, have seen 30% of their value go belly up, and they're going like, oh no, it's still a good investment. It's like, well, maybe it's a good investment at this price, but clearly not at this price. Not if it keeps going down. So that's what's going on. Lyft is getting sued. They're probably used to that by now, though. I mean, I certainly would be if I was them. What do you folks think, though? Do you think investors have like a case here to sue Lyft? Do you think Lyft was being deliberately, how should I put it, deceptive about the value of their company? I personally think all these companies are being deceptive. Again, if you have a $120 billion value company and they don't even make money, where's the value coming from at that point? That's what I have a hard time figuring out. And the investors that should have been a red flag for the investors before they even invested. But I'd like to know what you have to think. So comment below, like, favorite, share, subscribe. If you enjoy my videos, consider becoming a Patreon member. It's totally optional, of course, but even those $1 a month goes a long way to helping the channel run smoothly, and you get access to my Patreon's exclusive vlog. And if gas prices are getting you a little low, a little down in the dumps, check out the Get Upside app down below. It's free, but you get cash back on every gas purchase. Check me out at the Apptrepreneur vlog. Starting next week, we'll be having daily uploaded videos to the best of my ability. And if you want to talk to me or other rideshare people, check us out at the Apptrepreneur Hangouts on Facebook. And as always, flame responsibly. Have a good one.